So you're probably wondering, are credit card rewards taxable? Okay, so first things first, let's talk about what credit card rewards are and how it relates to taxes. So these can come in many forms. So you got cashback, you got points, you got miles, you even have discounts on your purchases. So when it comes to these, the IRS categorizes rewards differently depending on how you earn them. So let's look at two of the most common examples that you're probably going to run into if you happen to be able to have credit card rewards piled up. So let's talk about rewards earned through spending. So for example, you swipe your card for groceries, you spend $100, you earn 5% cash back on that. So that's $5 back in your pocket. The IRS generally considers this a discount on your purchase and not income. So guess what? It is not tax deductible. So how about sign-up bonuses? So now we have sign-up bonuses, which can be a little bit tricky. So if you're required to spend that money, like let's say you get $1,000 in the first 3 months to be able to get a $200 bonus, it's actually considered a discount, and that's also not taxable. However, on the other side, if you receive a reward with no spending requirement, it can be taxable. So if this might be a little bit confusing to you, let me go ahead and break this down and explain to you how this works. So to understand why this distinction even exists, let's talk about and dig into how the IRS defines income. So according to the IRS, income is any property, money, services you receive unless there's a specific exemption. So discounts aren't considered income because they reduce the cost of a purchase, but free money, like some sign-up bonuses, might not qualify as a discount. So here's a really good example that might help break this down. So you got scenario one, where you earn $500 bonus for spending $3,000. That's not taxable. You got scenario two, where you open up a bank account and get $300 just for opening it. That is considered taxable. So let's talk more about taxable rewards. So if you receive a reward that isn't tied to your spending, like for instance, you get a referral bonus or promotion from a bank, you'll likely get what's called a 1099 form at the end of the year, which you must report as income. So let's say, for example, you refer a friend to your credit card company and you end up earning $50 as a bonus. That's going to be considered income. While this may not seem like a lot of money, it's still important to report it correctly to be able to avoid penalties for not reporting it or underreporting in the eyes of the IRS. So a quick list of taxable rewards could be referral bonuses. You have cash bonuses. You got promotional offers as well. So now let's move on to points and miles. So these rewards are usually considered non-taxable because they're treated as rebates. However, there is an exception if you sell or exchange them for cash. So let's say you earn 50,000 miles for signing up for a card. If you redeem those miles for flights, it's not taxable. But if you cash them out for $500, that's going to be considered a taxable income. All right, so let's talk about business credit cards and rewards. So business owners, listen up. So rewards earned through your business credit can be a little bit different. Since you're likely using your card for deductible business expenses, the rewards that you earn can still be tax-free. And that's one of the biggest benefits of having a business credit card, which means you can't deduct the full purchase amount. So example of this could be a business owner spends $1,000 on office supplies and you end up earning $50 of cash back. The deduction is $950 and not necessarily $1,000. So this ensures that you're not double dipping by deducting the full expense and keeping the rewards tax-free. All right, so let's talk about some ways so you can maximize the rewards and still being able to save money on taxes. So I'll wrap it up with a couple of tips here to be able to get the most out of your rewards without having to trigger taxes. So one thing you want to understand is that you want to use rewards for discounts. So you want to stick to cashbacks. You want to stick to points or miles that will reduce your costs. You also want to be really careful and making sure that you're avoiding cash out points to redeem it for travel or goods instead of being able to actually get cash back. You want to make sure that you're tracking your bonuses as well. So keep an eye out on taxable bonuses and expect to get a 1099 form at the end of the year. And most importantly, as you're navigating this scenario or any type of tax scenario that you want to be able to understand, you want to make sure that you're talking to a tax strategist to make sure you're handling all these things correctly to be able to help you save money on taxes. And if you're looking to be able to save more money on taxes, go ahead and watch this video over here for more.